All right, we're good to go there. Oh, all right, welcome you guys. And everybody here in C, everybody's good to go on that end. Oh, let me open up the chat over here on this side. Chat. You got a question, you can put it in the chat. All right. Today we're gonna go over the positions during the low volume, false moves versus true expansion, and entry timing. The perfect entry timing is what we're gonna go over. That's why I got so good at trading because I spent a lot of time focusing on entries alone. And the only way I got good at that was by staring at this for hours. Just pure market structure, trying to figure out what the hell is going on. And it wasn't until I started figuring out what was going on with the market structure that's when I started getting good until I figured it out. And that took me what, a few years? How long you guys been trading? 5 years. I got eight. 3 years. 4 years. 3, 4. You guys on there on the Zoom call, you guys got a lot too. So it's like people like to put a timeline on when they're gonna learn how to trade. That shit does not exist. A timeline on learning how to trade does not exist. The only thing that exists is how much effort you put into learning how to trade. And the most important part of trading is what we're about to go over, as far as my strategy is concerned, which is market structure. Market structure and price action is the nuts and bolts of everything that I do. Without being able to read this properly and understanding where we're at in the market and where we've been, I won't know where we can possibly go. Does that make sense? That makes sense to me.
Yeah. Yeah.
If you don't know what the market is doing and where it's been, like if you never look in the history of the market and just find out where it's been, then you just don't know where it's going to go. Whether it's up or down, you just don't know where it's going to go. So we're going to go over that right now. We're going to go because a lot of the guys weren't in on yesterday's. We're going to blend Tuesday and Wednesday together so we don't miss a beat. The first thing I like to do is go to the higher time frame. We're going to go to the higher time frame. We're going to go to the daily. A lot of you guys know this already, but we're going to wing over it. We're going to win over it and figure out. You guys are going to figure out how I look at things so that you can look at it the same way and create your own analysis and uh, paint the setups the same way I do, make the same amount of money. Well, different types of money, but you'll get a win rate as good as I can with the same setups. Like there's guys that are in the VIP chat. They're seeing setups before I even send the signal, but they don't even know I'm about to send the signal. Like Tommy's done that plenty of times. He's just like, yo, I'm looking at this. I'm like, oh yeah, Tommy, you looking at it? He's like, oh shit, I just that's it. And you already know he's going balls deep in that one right there. Because he's got double analysis. Oh yeah. You get what I'm saying? He did the analysis himself, and then I said the exact same analysis. Oh yeah. You're not gonna slam. Yo, that's a slam dunk. And that guy's aggressive too. When he trades, he's like he's playing. Yeah. He's not even I do shit that he does. This guy's fucking.
I'm modest with it. I'm
Yeah,
modest.
all right.
Yeah.
He's modest. That's what he says outside. Son of a gun. It's in. Sorry, guys. This guy's trying to get in on the Zoom. All right. So let's start fresh. Let's get the fundamentals going because everything I do on a daily basis is pure fundamental basics. So let's look at this monstrosity of the ES. This is the MES. This is the micros. But either way, this is fine because I'm looking at a setup on this that we're going to go over after we're done with these fundamentals. You guys can see here that this is the daily chart and it's only doing what? Basically, at the end of the day,
Going up.
all right, problem one solved. This shit is only going up, which is crazy to me. But hey, this is the S&P. This is a reflection of the S&P. So I don't go against what the market tells me because I've accepted the fact that I don't know anything. The reason I'm so good at trading is because I've accepted the fact that I don't know anything. The only thing I know is how to read the charts. And if the charts tell me to do something, that's what I do. I don't say, okay, there's a break of structure to the upside. Let me fucking short it. No, that's a bullish situation. Why the fuck would I short it? You get what I'm saying? Like the market tells me what to do. I don't tell the market what to do. Fuck all that. I'm not that guy. I understand that I have limits to my intelligence, but I'm not stupid either. If all I gotta do is listen to the market and I can print money, then what should I do, guys? Listen to the goddamn market. Fuck everything else. Fuck opinions. Fuck everybody with their. You guys seen that on Instagram. Everybody has an opinion about where the market is going to go. I always laugh at shit like that because I'm like, you don't know shit. Nobody knows where the market's going to go. You have an idea, and that's all you have. That's all you have. So we're going to do what the market tells us right now. So the first thing I'm going to do is I'm going to set key levels so I understand support and resistance areas anywhere that's going on. First thing I'm going to do, that's going to make it real simple, guys. We're going to go to the line chart. Get rid of all the extra analysis that you get with looking at candlesticks. Forget all that. You go to the line chart. We're going to keep it simple and stay within this area so we don't have to make this a long lesson, but an important one. First thing we're going to do is get out your horizontal. We're going to label that the daily. All right. We're going to make sure we highlight these highs here because it's obvious what they are. Oh, sorry, wrong one. Over here. And we're going to go ahead and highlight this low down here. This is very simple stuff. This shit ain't rocket science, guys. All you got to do is follow exactly what's going on there. I just got an email for Weeble. I should start trading options tomorrow. They were listening. They were listening. Like I haven't got an email from them for so long. All right. Want to get some action up in here. Want to get up in here. This is where all the action's at. So we're gonna go up in here, right? The main thing about looking for key levels, yes, you want to highlight your highs and your lows, but you also want to pay attention to areas like this, where once was resistance right here and now became support. Those are very strong areas of interest, key levels that you want to pay attention to. It may look like nothing, but you'll see. You'll see later, guys. You want to highlight that part? Go ahead and highlight this low right here. Highlight this low right here. We're keeping it nice and easy. All right? Nothing crazy, right? Let's go down to the 4-hour next. On the 4-hour, you can start to see a lot more definition. So since you're finding these levels on the 4-hour, you want to make sure that you highlight them as such. Very simple shit. We've done this in 4th or 5th grade in computer class. The only difference is we print thousands with these levels now. making way more than teachers do. At least that's the possibility you have if you pay attention. That's a good key level. I like this little spike right here, mainly because it's tapping twice here. Now, another one that's really important is this one too. Because why, guys? Why is this one a lot? Correct. You know how simple this shit is? Because resistance turns support. When you see those levels, you definitely pay attention. Now, we're going to leave these levels right here. We're going to go to the 1 hour, see if we see any more action that needs to be paid attention to. And if not, then leave it alone. Because what you don't want to do is put too many levels on your chart and you can't see the chart clearly. So you could put a level here. And since this is on a 1 hour, whenever you find a key level, you always attach it to that hour, or that time frame that you found it on, no matter what, so that you know what you're dealing with. The higher the time frame, the stronger that key level is, and vice versa. The lower the time frame, the weaker that time frame is. Doesn't mean it won't get respected just because it's a 1 hour. It just means that there's levels of severity that dictate what your risk is going to be when price gets to that area and you want to enter. So if price gets to the H4 key level and there's a 618 and there's an order block, I'm not trading it weak. I'm trading it very strong. I'm getting aggressive at that key level because I've got so many confirmations that tell me that this is a great area of rejection. And when price gets here, I've got the possibility to print a lot of money really fast. You get what I'm saying? That's why I label them what they are, because the H4 will tell me, all right, 4 bands. The H1 would be like, all right, 1 band. You get what I'm saying? I'm just making it simple, but that's basically what it does. That's basically what it does. So we've got some key levels there. We could probably do this one here too, just to highlight it. I don't really like key levels that close, but we don't need to go any lower than that. I wanna get away. He made it. Carlos is here, Tommy. Where you at? I fucking with
Yeah, shoot. I'd come over there too.
you. All right, so you see how simple it is to just apply these key levels. The only reason that you apply these key levels is because what these key levels are doing for you is allowing you to work faster in the market. Let's say you woke up and it's 9 o'clock. You need to make a decision by 9:30 in 30 minutes. Still got to brush your teeth. If you got your key levels set, you can make a decision in 15 minutes because these key levels, all they're doing is highlighting all of the support and resistance areas from the past and predicting possible areas of rejection in the future. So if they're right there in front of you, like me, when I make an analysis, I send an analysis in 10, 15 minutes tops. And I'm going through 3 or 4 pairs every morning because all my shit is set. I've already done the work. This is a lot of the work that gets done right up front on the back end. Right? So now look, we've highlighted everything on the line chart. And when we bring it back, look how pretty that shit looks, bro. You telling me this is not a roadmap to success? This is a money printing map. All I see is dollars when I see shit like this. You get what I'm saying? Like, look at that shit. It's like, all right, fuck. Now, for me, I see clearer this way. For me. But I've been doing this for a long time. You get what I'm saying? So it's like, when I see shit like this, I get real happy. Because I know that there's possibilities that are about to happen with what I'm looking at. So which brings me to the next subject is looking for a trend, looking for and identifying, is this market still bullish or is it about to turn around? You got to talk to yourself like that as a trader. You get what I'm saying? Because if you don't, who the fuck are you going to talk to? Somebody that doesn't know shit? Or you're gonna go on YouTube and wait 30 minutes for this guy to get to one little sentence that you need in order to make an answer? Fuck that. Plot your charts. Let the market tell you what it wants to do. And this market right now in front of us is telling us that it's still bullish. Why do you guys think that it's telling us that it's still bullish?
Creating higher highs.
It's creating higher highs and doing. What else is it doing? It's doing something that's making me say, "Oh snap!"
Higher lows.
It's got that too, but it's breaking something.
All time.
It's breaking structure to the upside, and it continues to do so. Like, look at this. Look at all this shit right here. Boom, nigga, like it's right in front of us, guys. Like, there's nothing that we need to like really think about. It's right in front of us, guys. Like, look at that fucking thing. That shit is juicy to me. All I see is money. If the market decides to come back to it, you get what I'm saying? I'll leave this highlighted so we can see what this is. If this son of a gun decides to come back in this area, oh my God. Bye. Goodbye. So we're gonna jump on that rocket. I've already got it set up over here, you know what I'm saying? But I don't want to give away too much. So we're still in the lesson. Still in the lesson. Chill. We'll get that at the end. We'll get that at the end. Everybody's just stop. But you see the snap of that, but this is how I get to the work. This is how I get the work done to get to those answers confidently. Like, I feel good when I see setups that I know, because I don't really have to think much in order to make a decision. It's just like, well, the market said I should get in here, so fuck it. Thank you, S&P. Oh, bro, that's all it is. Thank you. It doesn't have to be rocket science. So we've got what's very important here. We're going back to it. We've got the market that already is telling us we're going up, right? Going up. We got a high. I'm sorry, we got a higher high, higher low, higher high. You can go all the way up here to be like higher high, higher low, higher high. That's an equal high, higher, equal low, and then a higher high. All we're doing here, huh? Yeah, they did. If they were on the lower time frame and didn't realize what was really happening. Exactly. Because all that's really happening is that it's just doing this. Boom, 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 boom. So we've got the most important part here. Proof that the market wants to continue up. Because if this market would have came here and broke down here, what should I be thinking about, guys? Change of structure, change of character. The trend is now short. I'm sure a lot of people shorted here. I know for a fact a lot of people shorted here, for sure. But that happens when you're not really plotting your charts, looking at the fact that this was a key level anyways. And if this candle would have stopped here with a body, all you needed to do was wait to see what the next candle is doing. And you can see that on this 1 hour chart, it closed bullish. Strong as fuck too. Like, what are you doing? It's time to buy. There's nothing else to do. Like, you don't gotta be there just because it's going up don't mean it can't go down. Fuck all that. Just follow the charts, because a lot of people are counterproductive because they think too much. You don't need to think much when you're looking at the chart, because the chart is doing all of the thinking for you in essence. All you got to do is look and train your eyes to recognize the patterns that are in front of you, which are just these higher highs, higher lows, higher high, higher lows, higher high. And the most important part for continuation is the breaks of structure. Not only did this price break structure, but it also broke a very strong H4 4-hour key level. That's what that did. Whether it comes back into this area, we don't know until the market decides to do it for us. We don't tell the market what to do. All we could do is make the setups. sorry, set up the setups is all we can do, and wait for it to come to us. In my strategy, I wait for it to come to us because I like to catch a ride on the train. I don't like to jump on a running train in essence because I don't know where it's going to stop at. But when it comes to pick me up, I've already plotted where I'm gonna get off at. Does that make sense to you guys? Like I'd rather plan my route than just jump on a fucking moving train and not know where it's going. So that's why I work a lot with the pullback strategy, where I wait for these breaks of structure and I wait for price to come back to the break of structure to enter anywhere in that area. So that's what we're going to look for right now. We're going to look for an actual entry to see if the market decides to want to come back into the zone and take us up with it. So the first thing I do is I look for like, get this up there. We've already got the market structure, the breaks of structure established, and the trend established. We got our bias. So all I want to do is look for extra forms of confirmation, which can be order blocks, which can be key levels that we've already plotted, shit like that. All right. The main thing I want to do here is just go looking. I'm just hunting for clues. So we got another clue here. We got an order block right here, little bastard. You know, just hiding there in the 30-minute chart. This could be a situation if the market decides to come back. You want to always label what you find in that time frame that you find it. That's very important, right? Okay, we've got a 30-minute order block sitting at a daily, which is sitting inside the entire break of structure. If this market decides to come back here, oh, we're rocking. Like there's nothing to do except make some money. You get what I'm saying? There's always potential to make money like that. So the next thing I'm going to do is I'm just going to pull out my trusty fib. The important part about a fib is that you need to first understand market structure. If you use a fib and you don't understand market structure, you're going to lose money a lot of the time. It's all about understanding market structure first so that you can use the Fibonacci tool the correct way. But so because we've already established what the last low was, we can go to point A here. Boom. And we'll go through a whole Fibonacci lesson, but I'm just going through it fast right now so you guys can see how it's supposed to be used. Point A down there because it's the last low. And this is moving right now. Like generally speaking, we'd go right here, but it's moving. So this point B is going to be dynamic until that candle closes. Dynamic meaning it's going to keep moving until that candle closes. So I don't need this H1 here. Delete that key though. Keep that one H1 key though. As you can see, it works even better right there. So this is what we're looking at now, guys. We're looking at a break of structure. It needs to retest. We've got a 30-minute order block. We've got a daily key level. And we've got a 618 right here. This is all types of confirmations that make me want to go long right here. That's what I would do. I would take out my long tool. I would set up my analysis. I'll go right here, 1 to 3. You could even go right here. Move that stop loss up a bit more. You got an 80 tick stop loss right here. Boom. And you're looking at basically a 1 to 4 right here. This right here is all you need. This is an A+ setup, in my opinion, because of all of the different forms of confirmation that we have. If there was like 2 or 3 confirmations missing, it wouldn't be an A+ setup. It'd be like a C.
What was that?
Oh, that's called the long position tool. That's the long position tool. So right here, we're looking at an A+ setup. If the market decides to come back here, boom, give us an entry anywhere in here. I don't care because I set a limit right there. And then just take that bad boy up.
What do you do if it hits these key levels and doesn't come to your area?
all I can do, like that happened actually today. Like we sent out I sent out a setup for NQ and she never came down. She never came all the way down, and that's how I don't chase. But sometimes you can find a really good entry, like over here too. This was no, this was ES.
I'm noticing like 50% pullbacks.
You could do you know why that happens? Because there's so much bullish momentum in the market, it doesn't have enough sellers to give you a full pullback extension.
Which means
So it'll stop at a 30, it'll stop at a 50. You're like, son of a bitch. Like my entry was just below it. I wanted that premium discount price, but I couldn't get it. And it ran up. Like right here, NQ did that to us. It was over here. That's the new setup, but it was over here. Yeah, this was the entry right here.
Right there on that rejection. That was a 50. That was a 50 rejection.
Yeah, it was a 50. This was today. It left us.
Yeah.
It just left us. The reason I didn't chase it was because I didn't like that this 30-minute order block was here.
It didn't come back to touch it or something.
Yeah.
Well, the reason I didn't chase it was because like some people would enter right here. Some people would just enter right here just because it's gone. But because this order block was there, I didn't get in here. But it ended up going anyway. You get what I'm saying?
Yeah.
But my rules are like if there's resistance there, I'm not gonna get in late at a bad entry. I'm still gonna hold my limit in place until a new high is formed. Then I know, all right, it's not coming back anymore. But if there's no new high formed and it just goes like this, like it just goes right here, and then starts dropping, you still got a potential to jump in right here.
It doesn't create a new high.
Yeah, if it didn't create a new high up here, like how it did here, then yeah, you gotta look at a new place. What's that?
Once it creates that new high, then you'll take out.
I'll take out the order. I'll get rid of that order. Like fuck it, because there's always another setup, guys.
But also, it did. Where did that candle on the bottom, or the lowest 30-minute candle? Did that close on top of that resistance?
Over here?
No, a little higher. That one. Yeah,
here?
That bottom.
Yeah, this one created a bullish continuation pattern.
You see the resistance on the left, right? Over there?
Over here?
A little bit more. A little to the right. That resistance right there.
Yeah, what about it?
No, to the right.
Oh, to the right?
That one right. Go down? Yeah, that one.
Oh, this right here.
Yeah, this is that's the exact level.
Yeah, this is what you call, this is called the break of structure and the retest of the break of structures right in front of our faces.
That's gonna be a decent setup right there.
That's absolutely.
Maybe not super heavy like that limit order you have.
Yeah, this is just you're getting 50% of the retracement, not the full. Like this is a great entry.
Yeah.
This is a great entry. I was just eyeballing this fucking delicious 30-minute order block that hasn't been fucked. You know, it was like it needed to get some play. I was like, you're not gonna go down. You're not gonna pick us up. Are you telling me you're not gonna pick us up? And sure enough, it didn't. Didn't pick us up because there was too many buyers and the momentum was too strong for it to come back premium. It didn't give us the premium price because this was the setup right around here. Setup right here. Look at the 618 right on top of the. I'm talking about this was so juicy. I was like, we got one, boys, and then we didn't have hamburgers today. Like it didn't happen. But that's part of the game. You're not gonna get every setup. Like I didn't get that setup, and I didn't chase. I didn't trade today. There was nothing for after this was over with. I was like, oh fuck this. I'm going to the gym because I know if I would have started getting up in it, I'm just not in my zone when I'm chasing things. It's not my comfort zone. My comfort zone is you stepping up to me and letting me in the car. I called the Uber. I know its name. When I start chasing, I don't even know who I'm in the car with. It's just something that happens. And you could get away with it. You can get away with it. You could jump in. I'm not saying you can't trade any of this. You surely can, because if you start paying attention to just trading the pure price action, this part right here would have told you, all right, fuck it. Let's try and buy it. Let's see what happens if we buy here. Because why? This right here is a break of structure. if you look at it for what it is. This is a break of now. My eyes are trained to see shit like this immediately, but you can see it broke structure to the upside. And then what did it do? Like I'll repaint this arrow again so you can see. It broke structure to the upside and it retested structure again. You could have easily got in right here. Like if you're just trading price action, which a lot of traders do, they'll jump in right there. Like fuck, it's time to ride. It already broke the structure, solid, real strong. Let's run it. Let's see how far we can take it.
So those candles, this is hourly, right? Doesn't that those
These
candles
are 30
mean
minutes.
oh, those are 30 minutes? Like undecisiveness? Because they're like
What, these two?
yeah.
It's not necessarily that it's just indecisiveness. Yes, it does mean that. Like right now, it's just deciding what to do. The market at this point right here didn't know if it wanted to go up or down. That's why you see it like that. But also, it was not closing below the break of structure. It was giving us rejections here.
Giving you the hint.
Yeah, like if I was in the mood for some action, I would have bought. I would have just said, man, fuck it. I'm gonna buy here and I'm gonna put the stop loss here. Let's see what it goes. I just wasn't in the mood.
The low is low?
Yeah, I would have put the stop loss here.
There.
Like I would have just got in right here, said fuck it, wherever I get in, like a crude entry, and then stop right here. Boom. And then just take it.
Did you still stick to like the 75%?
75% of what?
Back, so 618 to jump in, and then
Oh, you mean the 786?
Yeah.
The 786 is an area where
I think that's where I'm getting
price. If it needs to have an extra extension, price likes to extend to the 786. It's not an area that I focus on, but I do pay attention to it as far as when I'm placing my stops. If I'm placing my stops, like the other day, Tommy, remember I placed the stop above the 786 and we got stopped out. When you place your stop below or behind, rather, whether it's long or short, when you place your stop behind it, you have a specific level of rejection due to the price action at this level of extension. So like you could be right here, this close to it. And price might come in and breathe on your stop loss and then take off. Especially on the pairs that I focus on. That's the thing. That's another reason why I'm so good at trading, because I focus on specific pairs that react really well to my strategy. That makes sense? Like the reason I'm also so good is because I found pairs that work really good with the way that I trade. Sometimes you'll find a pair that makes no sense to you.
Shit goes to 88 every time.
And you won't even know, and you think you just suck when really you're just in the wrong market. You just need to find a pair that makes sense to you. That's why I like throughout the years, I've focused on these now. I never used to trade index. Ever. As a matter of fact, I was like, I don't know what the fuck's going on over there. Let me stay away from that. I'm trading only Forex. That's all I used to trade.
Forex pairs?
Forex pairs. EU, UJ, GJ, all that, which are great tools to trade with, but there's so much more action in the indexes and gold. And that's why now, huh?
I was there for that adventure.
And then also for the same thing.
3 o'clock in the morning.
Who's that? That's Fabrice? Oh, Fabrice.
Yeah, that's Fabrice.
I remember those days. 4 o'clock in the morning. We out there. Crazy.
Well, you said 4 o'clock in the morning. Where
For
you
GJ,
on GJ, yeah.
Yeah, man.
Can I say something, Fabrice?
Yeah.
Yeah.
Fabrice.
Yo, who's that?
That's that shot.
Yeah, I don't know if they see you or not.
Now he saw me. I'm
See?
over here with Jose.
Hold on, let me put you on the chair. Oh, no, you ain't gonna see it.
He saw me.
Oh yeah, hey, there you go.
Bristle.
I didn't know you
Slap.
pulled up. That's good shit.
I pulled up last second, bro, but he invited me like an hour ago.
What's
Hour
that?
and a half ago.
Him and Kalari out here.
Oh yeah, dang.
And I brought Kalari with me too.
Where you at?
Yeah. Shit, I'm chefing up right now. I'm cooking.
Where's he at, Karma?
Oh
No,
no,
I'm
he's
home.
cooking right now.
Oh, you're at
Yeah,
home actually cooking. I thought you were trading. Cooking.
No, I got a homegirl of mine. She really wanted me to cook. She's not. I'm very good at cooking, so she's like, "Can you cook this for me?" And I'm like, "Bet." We haven't done so.
Oh, I'm already
About to
knowing.
do-
Anyone else?
Yes, sir.
Yeah. So you guys have any questions so far? Anybody?
Explain again how you said the opposition tool.
Oh yeah, for sure. How I said it and why I said it. All right.
I use the fair based on what the fix tells you that's what you.
Yes, absolutely. It's all about what the price action tells me and also where the fib lands. The reason a lot of the times my entries are always going into instant profits is because I know how to use the fib very well and I respect it. Like whatever the number it tells me on that 618, depending on where that 618 lands within market structure, is what I'm going to use for the entry. So, like, this is a great example of that. I've got two levels of entry right here. What do you guys think that those levels of entry are?
618, and then
Definitely the 618
and the 30-minute daily.
And the 786.
and the 30-minute what? The order block?
Yeah.
Yeah. The top of the 30-minute order block. And there's a third one too. The daily key level. That's another one. Shit. That's a daily key level. The only thing that gets stronger than that is weekly and monthly, and we don't even need those right now because we're looking for daily moves. We're looking for intraday moves. My specialty is catching the move of the day. And because I approach the market the way I do, I more than likely 80 to 90% of the time always catch the move of that day in the session. So like my what's the word I'm looking for? My profits can range exponentially because I'm not just scalping. I'm not just looking for 20 ticks or nothing like that, which is perfectly fine. Scalping, there's no wrong with scalping, but I'm not a scalper. I'm originally a swing trader. So I'm looking for this. Like, I want this, right? I want that. That's what I want. I want the whole sandwich, you know? So in order for me to catch something like that, I have to recognize things like this here. And so this is why we look for the proper entries with the long positioning tool. We can decide if we want to get in here, right there, at the 618. We can decide if we want to get in at the top of the order block, which is right there, or we can decide if we want to get in on the daily key level.
I'm sorry, where's that tool on the toolbar?
Oh, right down here. This is you see the little L right there, long position? That's where I hold it. And then I'll just place it right here. Boom. Now, for me, because I'm looking for the move of the day, that means that I need to be cognizant of how much room I have for risk. And where I need to place my stop loss is just as important as where I place my entry when I'm taking these trades. Because I need to accept the fact that whatever it is that I risk, meaning money, that's going to come out to the value inside this red box, I need to be okay with it and not give a fuck if I lose it. So where I place this stop loss is very important because if I place it too close, I could be out quick. If I place it too far, I could be risking too much, but at the same time, I can control the level of risk. But also with futures, you can only go as low as one contract. So this shit can turn into madness if you're going too far. But if you know that it's just all you have to do is really follow market structure, and you know that there's a 30-minute order block here, and you've got a daily key level there, and a 786 here, there's a lot of lines of defense here for you to just place your stop loss just right below the order block. You could be comfortable right there. Some people go right here, which is really where it's supposed to be. But sometimes this gets too pricey when it gets to futures. So I would place my stop loss right here, well below the 786, which is a good spot to place a stop loss to. You can place it just below that, but For me, and Fabrice knows this about me, I like to have enough breathing room. Otherwise, I get nervous. Because just because I'm okay getting hit with the stop loss doesn't mean I'm gonna like it. That doesn't mean I'm gonna smile about it. That shit doesn't feel good. Like I hate when that shit happens. That's why I allow my trades to breathe. So if price does come in here and decides to go past the 618, past the order block, past the daily key level, and down here, I'm still good. Because by the time it gets here, more than likely it's going to start being exhausted and start running back up, which 80% of the time, what happens with the signals that I send you guys?
Should
That
be
shit run. And that's not by accident. That's by experience. It just happens like that. I trust the market. I trust the strategy, and I trust my ability to just wait. And that's why this can work. That's why it works 80% of the time. I like to say 90, but nobody believes 90, so I stick with 80 to be conservative. But this shit works so much, man. It's fucking crazy. And that's all you have to do every day. You don't have to set your key levels every day. I suggest you set your key levels at least once a month. Have them there ready. But if the market's making it's printing new candles in new territory, then you have to adjust your key levels for those areas. But for the most part, like if you guys are trading a pair that's been around for quite some time and it's not in new highs or lows, you can set your key levels once a month and just fucking bank off all that shit. It's crazy how it works. Crazy how it works. One of these days, either this week or next week, we can have a key level class, and I'll show you just how to just look at it, the proper way to set, because everybody sets key levels differently. That's why some people can set key levels and it could not work, while another guy setting key levels and all his shit's hitting. It's all about pattern recognition and what you're looking at in the market. The more you get obsessed with market structure, the more money you can make like this. Like right now, the market seems to want to continue to go up, right, guys? So what are we looking at? Let's say it doesn't come back down. So what do we have to work with right here, guys? What's the first thing you guys notice that the market is doing? Very simple. It's just creating new highs, which also means that this is a break of structure.
Right. Yep.
Right?
Yep.
Like once a week, man. Like sometimes every 3 days. It just depends what it's moving, but sometimes because I've been doing it for so long, I don't even need to like slap the key levels on just yet because it's still printing. So I'm just like, I wait till the end of the day and then I'll do it, or the end of the week and then I'll do it. But I always have them on. So we've got structure here. We got a break of structure, right? We don't know where this is gonna stop. We still got 7 minutes on this 30-minute candle. But more than likely, if it starts to come down, let's say this was our area of interest, you could probably come back down here and test this order block and then go up, right? Very simple way to look at it. So obviously this is here. Price did already run through this order block zone already. So we're just gonna look at this and see what the 1 hour looks like. There's a fucking nice order block right there. These are the traps. Very nice 1 hour order block right there. Just sitting there, dog. You know, we're just flowing with the market right now. So you could do two things. Because technically, this was the last low right here with this candle right here. Right? Technically, you could go like this.
That's something
This is when shit gets tricky. This is why I don't dance in these areas, because anything can happen here. Because price, look at all this imbalance in price. It still hasn't come back here. Yeah, we're in a bullish market. There's a lot of momentum going up. But if you take an entry here, there's a possibility that you could get taken out because the market still needs to come back in order to go up. That doesn't mean it'll happen. You get what I'm saying? So in order to dance in this, you have to go to the lower time frame to find some action. You gotta go to the lower time frame to find some action. All you can really do here is look at this right here. That's what we're looking at. Break of structure here, another break of structure here, right? That's what we're looking at. If you wanted to dance in here, you would take this and you go right here. This is the last low, right? And you just focus like this. What's the risk about this that's going on in the market right now? Why this is dangerous? We're at new highs. You don't know what's going to happen at 9.
Some massive whale.
Yeah, somebody could just be like, time to sell.
Something out of nowhere.
That's the risk right now.
I said that Trump got that speech.
And he got that speech. Is that tonight? You better not set no limits tonight, guys. If that guy talks, which he will, it's going to be a problem. So this is, yeah, right. It could just be like, I'm not fucking living. Fuck this shit.
But man, they
Show you we're here.
Yeah, exactly. I mean, all you gotta do is buy. It doesn't even take a smart guy to trade right now. All you have to do is wake up in the morning and go long.
Somebody said you could have been in a coma for the last 3 months and been a millionaire.
Yeah, you could have. It's because you never touched your shit.
You never sold a position.
Because you never sold a position. Exactly.
I remember hearing about one guy swing a single contract on ES from April's Brady Street, and he's up 350K.
I should have did that. I should have did that. I should have did that on a mini.
A single mini since April's lowest.
If he's holding that, I wonder what the fees are for holding that. Wait, on contract with option or futures?
One ES mini takes $1,000. It takes $1,000 in a futures account to buy it.
Right, but to hold it,
But to hold it is dangerous. You need a bottom tip.
it's not even just that. It's I'm trying to figure out how he holds it too.
You probably have a contract. Well, it's an option. It's futures.
No, it's a future.
So he probably has like 10 or 20K, 50K.
He needs at least 25K in that account to hold that.
At least 10. Target 200, 300,000.
Yeah, because they wax you to hold in futures if you can do it.
Really?
Apparently, I haven't held in futures because they always liquidate me at 4. It doesn't matter if it's a prop firm or a live account. They liquidate me at 4.
Some live accounts let you swing from that 5 p.m. close to 6.
Yeah, if you have the liquidity in to cover the swap. They call it a swap. I don't know what they call it in future.
You have to have enough to be able to have that gap.
I want to find out because there's a chart that shows you what the fees are, and when I looked at certain fees for a certain shit, I was like, what? Some contracts they're like, yo, to hold this overnight, it's gonna charge you $500 on the swap.
So funders usually never let you swing unless you buy a specific swing funding proper.
Well, that's for prop firm. I'm just talking about a live cash account.
They should let you.
I tried.
But you're only gonna have
They be clocking me out at 4 o'clock. I'm like, damn, Willis. But yeah, guys. Emilio, you got any questions on this? I don't have any questions.
Or like if you want to continue like finding little small.
Yeah, like how we were here. This is when, if we're like getting antsy, we're looking for positions. But you have to keep in mind where you're always at in the market. It's very important to keep in mind where you're at in the market when you start looking at the market every day. As soon as you wake up, where are we? That's all you got to ask yourself. Where the fuck are we? Look at this shit. If this market keeps going up, right? This is just a hypothetical. Remember, this is the break of structure here, right? This market, I know it looks so fucking clean. That's why I love swing trading. This high right here can go as high as here. Now, I've done this shit before where I've placed my fib in the future for point B just to line up over here. Now, I don't recommend this. I'm just telling you guys, I've been doing this for so long that I've done this just because. And when I wake up in the morning, the market gets to that level up there because I line this shit up. I'm like, it doesn't do it every time, but I've caught this sometimes and I'm like, oh shit, I'm a wizard. And then other times I get clapped because I'm a dumbass.
You were
doing some shit that wasn't there in the first place.
Yeah.
But this happens. This happens.
There's only one wizard.
This happens.
Yeah, Mallard.
So yeah, look at that shit. Just keep printing new highs. This could happen here, right here. We won't know until the morning. But for now, all you could do, because price is still continuing to move up, point B on the fib continues to move. Until you see a candle go like this, go close below this last low, we got bearish. Then it does a little retracement, and then it comes back down. When you see these breaks of structure, that's when you know that, all right, now it's time for price to come back. Until then, all you can do is keep point B dynamic and keep moving it as long as the new wick is printed higher. Because we're in all-time highs. We're in no man's land right now, guys.
It's a great lesson right there. So how do you read market structure that if it is creating a high, you know how they create these wicks, like that little one that was bearish, like yellow one right in the middle?
This?
Right there, yeah.
This.
It shows that the market wants to go down. It's what?
Well, it didn't show that the market wanted to go down. This just showed a form of exhaustion. Okay. This is a form of exhaustion. What shows that a market wants to go down is actual price action and market structure starts printing and closing candles down. Like real candles like this, like this, like this, like this. This is a baby. Yes, this is a hammer, but so what? You get what I'm saying? It's just there. So you don't have to take every candle so literal, because you always have to keep in context the overall aspect of what the market is doing. As long as you're paying attention to everything that's going on, you won't get caught up in the nuances and trapped and clapped like it always knows what to do with you guys. It knows. You think it printed that candle by accident? That shit was printed to entice any trader to sell right there. And I guarantee you motherfuckers sold right there.
That's where I'm going to ask. So where's a good place to read market and candles to say, okay, I'm going to close my position now because it is turning the direction?
Oh, if you were already long?
You're in that plate right now, and you're already long. When is it that you would decide?
Well, I would have decided that before I got into the plate. My exits are determined. My exits are predetermined before I ever enter the market. I don't start guessing after I enter the market, because that I have no answer. You get what I'm saying? Now I'm just trading until it starts to go against me. And that's just never good.
Okay, so go.
If let's say for your situation, for your question, if that is the case, what you have to do is you have to go here to the lower time frame, right? And start watching for breaks of structure against your direction. So since there are none, you can keep holding. So like for instance, if I was there and I didn't have a predetermined exit, all I would do was grab one of these break of structure lines and keep it in front of me. So let's say I got in here, right? It gave me a break of structure. It came back down. It gave me another break of structure. Right now, price is it's going to come back down and more than likely test this break of structure right here. As long as it starts going back up above that that break of structure, I can hold. But the moment price starts closing down here and down below this last low,
You could clearly see it's doing that on that one that you just put. See how that break of structure? It did 4 or 5 candles below. So put the structure behind it. The one you had before. Put the structure behind it.
This one.
There you go. Yeah. So you see how the candle broke above, right? And then it came back down and broke 2 candles below that structure, which in the example you're giving me, I'm looking at it as like, okay, this thing wants to go down because there's 2 or 3 candles below.
I know why you're saying that.
I just want to understand
but
that part.
You always have to pay attention to the price action that's in front of you. What didn't it close below?
Body candle? Or the structure below it?
This is structure. This is structure right here. It's always structure. Like if I go down on 5 minutes, now you're gonna go cross-eyed. But this is structure right here.
The reason why I say is because if I'm in a
boom, 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 right? This right here is a break of structure and a retest. That's all what you just pointed out. That's all this was. That's why I said it's so important to get really good at reading market structure, because you would know that this is fine. Because all it's doing is retesting this break of structure, which is so very important to keep in mind.
That's something that
you only get psyched out. The only time you get psyched out is when you don't know what you're looking at. That's it. It's only because you just didn't see something and then you saw it after. You're like, damn, why did I close? A lot of the realizations are after candles print. But if you can get your mind and your if you can get your mind really good at pattern recognition within the candles, you can make a lot of money, because this type of action right here is what helps me grow profits exponentially versus getting out right here. Now look, I made an extra leg of profits. You get what I'm saying? But if I didn't realize, which you didn't know and you didn't realize, this was already here for safety.
$1,000.
You would have closed right here. It would have printed more. It would have sent you into tilt like, oh, fuck, let me get in again. Now you're in at another fucking high you shouldn't have been in the first place. When all you really had to do was hold your original position. Let's say it was right here. Yeah. And that's why, you know, like people do scalp.
Jose, you would not be looking to short at all.
There's nothing telling me to short yet.
Because, like you said, those are not topping scales on this time. Those are just exhaustion.
Which one?
Not like the candles he was saying, 30-minute.
Oh, correct. Yeah, correct. Yeah, there's nothing. That's just a form of exhaustion. Like, there's nothing wrong with what he said. What he said highlighted a fact that a lot of people get caught up in. Which one the candles in? Was it the 1 hour? Oh, right here.
Yes.
Yeah, the thing is that, like, okay, for instance, this 1 hour candle, like what you're talking about right now, this candle right here. There's nothing for me to short here until I see what this candle does. Now, because this candle didn't close down here, bearish, there's nothing for me to short. All I'm doing is listening and waiting for the market to tell me what to do. The market tells me if it's time to short. I'm going to tell you right now. I'll tell you right now. If this market gave me this candle right here, I'd place my entry right here. And I take it all the way the fuck down there. That's time to short. But because that's not the candle that was printed, the market is telling me it's still going up. There's nothing to short if the market doesn't say it's time to short.
Yeah, see it this way in an hour frame, but while you're in that trade and you don't see that pin bar, where is it that your first initial move of saying, okay, I need to start looking out of closing my position? Well, 5 minutes, 15 minutes. This was a question I had with you before.
Yes.
Because by the time that 15-minute closed, I'm like, okay, this thing took all my profits.
The
I'm
thing
down
is,
now.
when you're going down to the lower time frames, if you're not experienced, you shouldn't be in the lower time frames. What helps you manage better are cleaner candles, simple candles, because they play less games on you. That's manipulation. The market is made up of manipulation. They want everybody else. They want everybody else. So like,
Yeah.
yeah. So for you, it's like the best thing that you could do is
Once you're blazing.
once you're placing, like let's say your entry was right here, right? Let's say this is you going long right here,
Mm-hmm.
right? Let's say this is you going long, but where is the bar replay? But you don't know what to do from here, right? Let's go to the 15
Goes
minutes.
yellow on me right away.
It goes bare. It's like, damn, look at that fucking damn closing.
As soon as he bought.
The problem is, as soon as you bought, like you got in right here. You got in right here. This is a 15 minute.
Okay, right here. This is exactly what happened.
So this happens to everybody. Everybody gets clapped like I've got clapped like this. If he's trying to expose it, they try to immediately. What?
I do everything to get my mind off of listening. I just stop myself.
Believe it or not, that's the hard part.
I'm about to do something else. Like, I'm about to look back.
There's an option guide, right? So what do you do? And I think Weeble allows you because in Robinhood you can't put a stop loss on an option. Okay, so you don't use the stop loss. So the option is you agree that the 500 you put on 3 contracts, that's what you're willing to lose. Yeah. That's what your stop loss is, right?
But the thing is, I get in at a point where I'm almost wrong already. So
Wait, what?
Like keeps going this way, I'm closing.
like literally, I get in.
How long have they been there?
So long doesn't work from here, or the short doesn't work from here, it's not gonna work.
I understand what you're saying.
So like,
That's it.
36 basically. Right? It's like a
Well, he doesn't use bids. So for him, it's called like bottom ticket or top ticket.
yeah.
But he's getting in.
Wait for the best entry.
Yes.
Like almost worst opportunity, like that everyone's like, oh no, this is actually good. Like, yeah, I'm like, wait,
Yes.
right here might be the spot that if they force here, it
For sure.
should go.
But explain that like on a chart. Like I
I
understand.
Yeah, I'm not interested. You was on the
So this is where Kalani got in right here.
so that's what I'm buying right now.
Because it's yellow. Correct.
If it goes,
That's how I'm buying. I'm buying fucking that short candle's coming all the way.
exactly. If it goes lower than here, my idea is
It's invalid. Yeah.
So I'm wrong. I'm just gonna get it. But it now it has the most probability to go up.
Correct. We trade. Me and Kalari trade the exact same way with
That order block.
a different approach. Huh?
Go to that order block. The
This right here.
yeah, right there.
Well, this is your
Remember that? Is
like-
that the end?
like for you.
Isn't that the end where that order block is?
I mean, I don't trade by once. So I don't.
Like for you, Carlos, this is how you would be able to manage this. Like you would just have to go like this. Let's say you were in that trade. This is your support here. That's your support. Let's say your stop loss is here. Yes, you want to close this because I know how you trade. You're like, oh, fuck, it's over. It's different. It's understandable. All of that gets shaken off with experience. And the only way you're gonna gain experience is to give a fuck less. The more you don't care about losing, for some reason you start winning more. These markets only respect the cats that don't give a shit.
Yeah,
They
real shit.
I'm not making this up.
He's not.
I'm not making this up. I'm not talking out my ass either. The market respects the traders who give a shit less, so that this doesn't affect those guys. Because these guys are Stone Cold Steve Austin. We don't give a shit because we're ready to lose a bando 500. We came into the market knowing we may lose this, and we've accepted that fact. So when the market goes against you right here, When the market goes against you right here, you don't start sweating. You just switch to the higher time frame. Just stay right there. Just stay right there. I know it looks ugly. I know it looks ugly as shit. But just stay right there and wait for this time to pass. That's all you could do is wait for the candle to close because these markets are these candles are designed to inflict mental behavior. Not only that, these candles are made up of human behavior.
Look at that wick on the candle that closed.
That shit makes you want to fucking jump off the ship.
Out.
That's what you think. That's what it wants you to think. But in reality is that shit said fuck you. That's what you get for not holding. That's the reality. This is what you get for not holding. Now you gotta look at yourself in the mirror and ask yourself, do you want to do this for a living? Hey, listen, I'm saying this because I've been there before. There's not a way of losing I haven't experienced. I've experienced them all. I don't know how I'm here right now. But because I went through all that shit, that's why I get to experience profits now.
Yeah.
And that's the type of shit that I teach. I teach the short way to get through all the bullshit. If you just stick to the script, like straight up, market structure, price action, and that's what the bulk of your time goes into, I promise you, dog. I promise you. You're gonna be a monster trader. But you gotta do it. And it's all about just every day waking up, looking at the market for what it is and not thinking about what the market is, just accept what the market is and flow with that. And that's how you're going to gain your confidence because you got to bust your moves inside that. You get what I'm saying? And no one knows when you're going to reach that point. Nobody does. Everybody gets to that point at a different time. That's why I said, fuck it. Let's just start doing Tuesday, Wednesday, and Thursday. I'm trying to see who the fuck's got it because I want to build a team. I want to build a team of fucking savages. You get what I'm saying?
Hell yeah.
And we could do this shit. Fabrice knows. I've been playing this shit for a long time.
Mm-hmm.
And I'm trying to give you guys the opportunity to cut your learning curve in half. Because that's what you can do fucking with the strategy. You can cut your learning curve in half, dog. I'm telling you, because I've cut all the fluff out. There's no rocket science in this shit. It's so simple, it's unbelievable. That's why a lot of cats don't believe I do what I do. Because they're like, there's no way you're making money with it. You don't even have an IFEG or a DIG. I don't know what the fuck you're saying, buddy. That's a pullback. Nothing against other traders. I'm just saying I've cut through all of that shit. And I've proven it in every market. It doesn't matter what market I've been put in front of. I've traded for guys with options. I've traded with guys with just stocks. I've traded with guys, well, now I'm in futures. Forex, that shit's just my bitch. And don't even talk to me about metals. I'm fucking ham metal. You get what I'm saying?
Yeah. You see, like, what you do, like, with your levels, it basically, like, I use the SMA.
It's calculating that same shit.
It's the same shit.
It's just the way that you see it.
Yeah, exactly. It's just how I read it. But it's almost the exact same thing that you're doing.
Correct.
It's just differently charted.
Dog, I've seen you use your MA. I'm looking at that shit. I'm like, that shit look like a 618. Lined up the 618. That's the MA right there.
Exactly. That's why I said like
it's just different ways of looking at it. Oh, dog, listen.
If I level
with the way you already snipe,
I'm like, bro, if I see a level and an SMA line up, I'm dumping up.
That's all you would need to do.
It's like SMA that you're talking about.
That's all you need to do.
Yeah.
You said your key levels constant, and that MA lines up. Oh my god.
That's my hunter.
It's like one of the most intermediate,
50 and 10. That's it. And on a 30-minute chart, and I switch between like an hourly and a daily.
Imagine you enter on a bounce of the MA and there's a daily key level right.
Oh, I'm so that. Oh my god, that's what I'm saying. Like that's why now I'm like
you're holding it all in.
want to see it. I want to see if that setup from today is
30-minute time frame.
When you're in?
yeah.
That's
Like,
it.
I want to see
That plus
Oh,
like some
shit.
other influences, but right.
None of the VWAP, none of that shit.
The big
Yeah, this
SMA.
more definition. This shit's crazy.
VWAP's
I'm
good.
just like,
VWAP's
trying to
good.
make it as simple as possible.
Yes.
That's it.
but when I didn't know nothing, it was simple. But now that I know so much, I thought like,
But
No, I'm just
it might
saying,
be
the same
too
way.
much.
Sometimes
That's why I came
does
back
get
to
like
the basics. I was like, I gotta come back and see the.
You gotta go back and you gotta find the exact one that makes sense in your brain. And that's all it has to be.
Yeah.
If it
Everybody's
makes sense-
brain is different. Everybody trades
like,
different.
I see a million different ways to trade, and all I can do is respect it. And I'm like, I understand exactly what you're saying. But my setup, I'm sticking to mine because that's what I know. That's what works for me.
Do you mainly use Fibonacci on the hourly?
I use Fibonacci on every fucking time frame. Where I look at my main moves are after I've done my analysis from the daily, I go to the 4 hour. If I see something I like on the 4 hour, I place the Fibonacci on the 4 hour immediately. Every other time frame after that is irrelevant because the higher the time frame, the stronger the probability, and if it does happen, the more force you're gonna get into that trade. I do find them a lot on the 1 hours because sometimes I place the fib on the 4 hour, right? But there's a lot of market structure within the 1 hour time frame. So within there, I can actually dial in the entry, and I catch a lot of sniper moves like that too. Like that happens a lot. Like let's see if I can see it on here. The 4 hour. Well, this is the 4 hour fib right now, right? This wouldn't be the example because its price action is so damn clean.
Maybe you could answer that question with how you mentioned daily. Like when you first come in the morning, right? You put daily.
Let's
That's
go
the
to daily.
first thing you want to see. So when you put daily, what are you looking at to say, okay, I'm looking for a long here? Or
Well, I'm looking to see, like, let's say right now it was 9:30 in the morning. I want to see what this candle is doing. And with a daily candle, you can't really see much. So what I do is I take the fact that it's green, or this is blue,
yeah,
the fact that it's still long, and also I take into effect what's behind it. Where's it coming
that
from?
order block.
And it's coming from, well, yeah, there's an order block there, but what's first is market structure. So we've got a break of structure to the upside, 1, break of structure again to the upside, 2. We're bullish. The candle is blue right now. I'm only looking for longs. I'm not shorting nothing. There's nothing to short, guys. Like, stay away from shorts. Sure, you could catch it, but good luck. And don't talk to me about it. Like, I don't want to hear it because you might convince me too, and I don't want to be polluted. You know what I'm saying? We're all greedy. We want to catch the top 2, but Bennett, I've been burnt so many times. I don't want to talk about it. So I just pay attention to the market. So this is a 4 hour fib, right? There's nothing really to do here except keep it where it's at. Because the 4 hour candle is still populated, it's still printing. We got 38 minutes left. We don't know where this 4 hour is gonna land. You see what I'm saying, David?
Where you have that.
And so I just leave it there.
That bearish candle is the low, right?
That's the low.
Now, if you put the high into the next candle, which is the bullish one, yeah. Didn't that hit the 618? So that is now your low?
No, because the candle opened here. Candle opened here.
It opened.
Yeah, this is a bearish candle. It opened up here, closed below here. The very next 4 hour opened here, gave a little wick, and then just launched.
Okay, switch.
It never came back.
Actually pull back.
No.
That is something that I'm just understanding.
That's why looking at higher time frames simplifies a lot of things.
So if the candle was up there, can you explain that same thing you just said, but that it actually came and hit that area, that candle? How can we see that?
What is your
the
question?
Same thing you just did, which is the 4 hour on the. Bring back the fib. Yeah. Okay. Now that big candle right there,
this one,
bullish candle, right? Right. How do you know? How can that candle signal that it came back and touched the 618 in that candle? So now that's your new low.
Oh, we don't know that until we go down here. So we have to go to the correlating time frame.
Okay. So that was daily. So you put
daily
4.
correlates with the 4 hour. The 4 hour correlates with the 30. The 1 hour correlates with the 15. So from here, if I want to find a quick answer from the 4 hour, I go over to the 30 minute real quick.
Okay. There you go. Okay, so
There's
that
nothing to see here.
there's
The
nothing to
bitch
see,
just
'cause it
only
never
went
came
up.
back.
It never
There
came
you
back.
go.
That's how you get the quick answer.
That's always a mistake.
Time frame correlation is very important.
Very important. So it was daily, 4 hours, right?
Correct. And 1 hour to 15 minutes. That's how it bounces around when you get
You
the
don't
answers
think,
quick.
but that's one of the most important things of kind of reading market structure.
Oh yeah.
That shit's unbelievable.
And you say correlates in general, not even just Fibonacci. Like,
Yeah, what I'm not even talking about Fibonacci. Forget Fibonacci. I'm just talking about the butter of it all. Time frame correlation within market structure. You tie that together. So
sauce.
South. Like I'll text it in the chat too. The time frame correlation, so you guys can like memorize it. But it's simple too.
It's
Daily correlates with the 4. The 4 hour correlates with the 30 minute. And the 1 hour correlates with the 15 minutes. There's nothing you need to know about a lower time frame until you want to be meticulous. Nothing wrong with being in the 5, but you don't need it for what I do.
What do you call that?
Time frame correlation. We're no
Okay, so that answers
that.
that answers that question. So go back to what you think you were showing for him. Okay.
For David.
So he was actually just.
Did I answer your same question, David?
Yeah.
Or did we miss something?
No, you answered my question.
Okay, good.
My original question was like, where was Fibonacci like most powerful? You said 4 hour daily, which makes sense.
Stronger. They're stronger. Oh yeah, and that's what we were gonna get into also. Like,
how do you see the play? Right?
How do you know where to place the fib? The thing is, that's the thing. You don't know where to place the fib until you really look at the market. The market tells you where to place the fib because you're only supposed to place the fib on the true low or in the true high, and or either a true high or a true low if you're going short. But you need to be able to find that. So if you don't know how to read market structure properly, you're not going to find the true low or the true high. You get what I'm saying? So that's what it's all about. And the simplest way to do that is to start with the higher time frame. Because you have less noise in front of you. You don't want to start a fib on the 30. You want to start the fib on the 4. And you start the fib on the 4, go down to the 30 and see if there's any market structure within that 4 hour that creates another point to move the fib at. And if it starts making sense, you got to paint the picture for yourself too, because remaining flexible with the Fibonacci is the secret. You can't be fixed just because you said it there. That's where it stays. Sometimes you have to dance, and that's when mistakes are made. Because it goes back to being really good at reading market structure. That's what it's all about. You read that market structure properly, and it's fucking. What's the word I'm looking for? It becomes so simple, you don't believe it. So you start questioning your shit. You're like, that shit ain't gonna move. So you don't set the limit. You wake up in the morning, that bitch bang. You do the same shit again Wednesday. You don't set the limit. It just banged again. You start thinking you a bitch.
I set up every time.
I don't even think. I have no. I don't.
If I lose one, it's like
It's whatever.
You deal with a lot of pairs, or you just.
You guys got any questions over there online?
I'm good so far.
Sorry, like Meta, Tesla, like a bunch of different stocks. Yeah, tickers.
Yeah, I just tried
whatever the.
I couldn't hear what you said. Said something, Fabrice?
Oh yeah, no, I'm good so far.
Yeah, it happened to me too. Yeah.
You said something?
He's still man. Even though Meta picked you out.
Breezy, you said something?
Nah, I didn't. I'm good.
Oh, okay, my bad. I thought you had a question.
I think you were explaining like what.
We're pretty good for the night so far. Anybody got questions? Yeah, this is what we're doing.
I think you were asking about the daily thing. Remember how to create a play in the morning? So you said daily. You look at the daily. If it shows that it's
well,
bullish,
that's
I think that's what you were doing.
That's when you wake up in the morning, the first thing, the most important thing to find is the bias of the market. What's the bias? You know, where's this market going? Let's say you woke up at 8 and you need to find out what's happening. The first thing you want to start with is a glance at the daily. You don't need to sit there and study the daily. You just need to find out what direction that candle is in. Now, also, just because that shit started bullish, don't mean it's going to close bullish. So you need to understand that. The fact that we're at all-time highs needs to keep you wary. You need to be conscious of the fact that we're all at all-time highs. This motherfucker could fall out at
For
any moment.
example, the gold crash,
Oh my god.
gold silver crash. One day gold
Wait to
dropped
buy
like
that shit,
20%, 15%, silver dropped like 30-40% in a single day.
Nasty.
But it was parabolic more.
But it was because it was a parabolic run for the last like few years.
Yeah, and you don't know when that's gonna happen.
Yeah.
It's just gonna
Just gotta ride away.
you just gotta ride.
Well, I had
You're
an
right.
idea that around that time there was going to be a reversal. I was telling him, I was like 5100, 5200 area, and it went to 5300. And it's
I've heard that, which is market manipulation, right? There's this volume thing that you could create, like on your charts, that shows the volume from the sides instead. And what
Oh yeah, that's this right here.
what it shows is that if a stock, if there's people not trading on it, it's just going parabolic. It's it's making people think FOMO. They're like, oh shit, I'm missing out. It's moving fast, but there's really nobody in there. Right? There's nobody in there.
Are you talking about volume profile or order flow?
Because it
I
usually
like that
shows
one.
on this side, not on the bottom. Because mine shows on the bottom, but there's one that shows it here.
This is basically it.
That's basically
Something
just like a small.
This is
That.
a
like
type of bullet profile.
So notice
with
when
this-
did that blue candle create? When there was the least volume. That means there's less people actually making money. The only people that make money are the market makers.
Well, this was, if I'm not mistaken, this is peak volume.
The lower, like you see,
I'm not a
colors, right?
I'm not a volume profile master,
But I'm gonna show you what I picked up.
but this is where I would enter.
Right. The only time this candle actually created, this is when it was buying. Right?
Oh, I see what you mean. Where it started.
Right here. This is the least buyers. This is when we weren't buying. We were scared. We were like, oh, it's too high. It left us. So supposedly that's when the actual move happens. When there's less people making money.
Is that what they say?
Huh? That's what they say. Market makers are here. They create the move, right? So when the move happens, then it's up here. That's where we start coming in. We start buying this, and probably this will
by then market makers are already probably
they
out.
already made their money. The actual move is when there's less of us. That's what they say. And if you look at that,
I don't know about that part. If there's less of us,
it's less because of the market moves. I don't know if there's these candles on the bottom. Which one are the ones on the bottom?
Volume.
oh, that's just another volume profile.
They call it like in the chat that I'm in. They call it like a BBL, which is a fake.
A B.
Right. So when this shit moves
the
like
fuck
this,
they talking about?
but it's true. So
Dog, those volumes on the bottom, that's little indication of volume in the market. There ain't no BBL about that.
Don't think about it. If the
What
market's
them
like
boys
this,
talking about in there?
are high right here. They're not showing right
No,
now.
I know. Let me pull it up for you so you can see.
So I can give you like an example.
Yeah, I see what you're talking about.
This ain't something to learn. This is just to see if we can correlate that. Volume
Where
is
is
good
the
for
volume? No, it's a basic. It's a basic. No, that's VWAP. No, I'm looking for just volume. Where? My bad. Let me go back.
Just a basic one right here. Should show up.
Where you were
These are
looking
the
at?
ones you have saved. Yeah, go down. Should be on the bottom. There.
Right there. Okay.
All right.
That's the biggest volume.
So this one.
That's what I'm saying. There ain't no BBL. Dude.
That's a good
That's
sign right there.
The
That
thing
shows
is,
that all the sellers came in, right?
correct.
Now we're seeing. Okay, then as you can see, the moving one, this one's correct. Now that one actually is going up, and then this is going up too, but it's actually less.
Yes, but it's also reflecting the size of that candle. Not in actuality reflection, but you see how small.
We're in Asia. See if that.
But I'm just showing you how to look at that because you see how small this candle is and this candle is.
Correct. Okay, I see what you're saying.
That's why these is smaller, because there's less volume in this one and even less volume in this one, and it's still open.
We're gonna do highs, and there's still people buying.
And there's still
Good
people
sign.
buying.
Good sign.
Yeah.
Go this way. See, like our day. 40.
So I was like, today's the 13th. You're like right around here.
I love volume. It's a great confluence I always use.
So like, boom, sellers, buyers,
Volume tends to show
Yeah, you see volume picking up.
volume picked up, volume picked up, volume picked all the way up.
And when you see heavy volume
then it's-
picking, you know something's going on.
Yeah,
Yeah.
for sure. Like this volume right here is being printed right now. Like we're seeing, because this isn't closed yet,
I mean, Asia session just opened.
and it's Asian.
Honestly, I don't even look at that.
I don't look at shit. I never look at volume because, well, number one, I've never studied it. So, but I do understand some of it.
I heard you guys talking about it earlier, but it was orders, something like that.
He was talking about flow, order flow.
It's similar to that.
It's similar to volume.
It is similar to that, isn't it?
It's not actual volume. Like it's the
Yeah, it
volume
just shows the orders are coming
We're
in.
basically done here, guys.
Volume of an option. It's not the volume of the actual stock.
You never said the rest is gonna be shit talking all night.
They could be slamming a contract. It doesn't necessarily mean there's volume.
I think volume is the true amount of shares being bought and sold. So that's pretty much
The reflection of
that's equity, more or less. You're seeing true equity markets, not options money, not futures money.
Yeah.
There's
You're seeing
one.
the equity of people.
What
actually
is the
owning
volume
S&P,
profile that
owning
you
this,
saw?
owning that, versus a bunch of money coming. He'll look at like
Give me
pretty much
a
the opposite. He'll look at the amount of money flowing in options, which is more
There
leverage,
you go.
higher leverage.
The visible range
Sometimes even
profile.
bigger money.
This is the one you're talking about, Carlos.
Yeah, that's the one.
Visible range profile.
And notice the biggest candle happens when there's less volume, which is crazy. That's called market manipulation.
Yeah, there's something.
Less people
I remember hearing
actually part of
something
it,
about that.
and that's when the move happens, and that's where you need to be. It's crazy.
Like this is where you need to be.
Now the biggest candle, notice that is the least, like at the end of it, I believe it is. See how it's the least part
Over
right
here?
Yeah, that's where the actual move happened. The biggest part of the move happens at that time.
That is not how I see things at all.
That's where the move finished. Like the biggest move
Yeah.
started at that.
I understand what you're saying, but there's like, I know that there's also an approach to why they even look at it like that and why that is the way it is. But that's also, for me, my exit.
Yeah.
Correct.
That's why there's not that.
I'm out.
Because I don't think anyone.
Or at least a trim. At least,
Yeah.
Oh shit, shrimp for sure. Shrimp for sure, for sure. But I know there's a strategy to it.
Yeah, that's what I'm trying to figure
And
out.
also, you know, they're trading options on that side, so maybe there's another layer of understanding that I don't have.
do you only trade ES and S&P and NAS?
No, I trade NASDAQ, NASDAQ, S&P, Dow Jones, gold.
I'm gonna trade Russell.
Now, stocks are coming to futures,
Are they?
so we're about to have a lot of motherfucking
Nvidia?
fun. Stocks.
Definitely Nvidia.
No, now I can't say which one, so I'm not the one, but he said
When'd you hear about that?
this summer stocks are coming to futures, guys.
I did. It's gonna be 24-hour stocks.
That's something.
I already told everybody in the chat, like, you'll start looking at which stock you want, because the one, if it lines up with the strategy, we're adding it to the roster. We already got 4 on the roster. VIP chat be lit up, dog. We be just, Tommy, what the fuck we be doing in that chat, Tommy?
Murder. That's what we do. Murder.
Schmurderton. What? So when we found out, like, the stocks are coming to futures, we were like, I ain't gonna lie, I was a little bit salivating. You know what I'm saying? I was like, oh, where did they get a load of us? They might not like us. You know, they don't like us every morning. That's why we didn't get fucking, they didn't hit the limit today. They're like, fuck these boys.
That's exactly why. That's exactly why.
Fuck these, man. I'm tired of these motherfuckers. But we're basically done, guys. It's 9:30. Right now, we're just gonna shoot the shit. This was a great lesson. We're gonna do this Tuesday, Wednesday, Thursday, 8 to 10. And this right here, I'll send it in the chat, is the possible entry zone. I'm sending this only to the cats that are actually in Tokyo Night Protocol, which I don't know how the fuck I came up with that name, but this shit sounded
Tokyo
cool.
Night Protocol.
Tokyo Night
Wait,
Protocol.
wait, one more time. Hey,
Tokyo
run that
Night
name one more
Protocol.
time.
Tokyo Night Protocol, dude.
That's not bad.
Let's
not
get
bad.
let's get that money and go to Tokyo.
We wish. I want to trade Tokyo in Tokyo.
I wanna know.
But I'm gonna send this into the chat for you guys to take advantage of, and hopefully it hits by either tonight or tomorrow morning. We'll take it from there, guys. I'm gonna stop the recording now.
All right.